watching NDTV Profit. Well, one company that is in focus today is Senco Gold, and to talk about the company's future outlook, we are joined by Mr. Suvankar Sen, the MD and CEO of Senco Gold. Sir, welcome to the show. My first question to you is that, gold is seeing a lot of volatility when it comes to pricing. Now, recent week also, the gold prices did see a lot of plunging. So I want to understand that, how has volatility in gold prices affected your overall business?
So Mahima, we are now seeing the end of Q1, which is April, May, June that is ending, and the prices have been, comparatively the way it was in the month of April. And if you look at June, the prices has been on a kind of a downward trend. But this volatility and this increase in prices that we have seen over the last, I would say, 4-5 months is driven by the uncertainties and the gold buying that is happening by the central banks. So, as a strategy for de-dollarization, as a strategy to reduce the dependency on the US and the dollars, countries such as China, Russia, they have been buying a lot of gold. You have also seen that our country, India, has brought in gold back from the vaults that were lying in the Western countries. So it's basically a whole process of buying gold by the central banks to make their assets stronger. So that is the reason we have seen this increase in gold prices. If we look at the consumer demand perspective, there has not been much of consumer demand because consumers' budget is only growing to that extent, not to the extent that the gold prices have increased by 20-25%. The budget can increase by 5-10%. So therefore, we are seeing more from the uncertainty, the war situation, the Israel-Hamas war, Ukraine-Russia war. And it is impacting business. Volumes are going to get hit because of the price rise. Value-wise, you might not be able to understand because people end up buying as per the budget, or more consumers are shifting from the unorganized to organized sector. And that is where you might not understand in value terms, but volume terms, yes, there will be a dip.
Right. Okay. Okay. That's about how the prices have been so far. But going forward, do you also expect similar kind of volatility in gold prices, or do you expect some kind of relief in FY25?
So if you look at, so we had our Indian election. We are seeing that there is, elections happening in many countries of the world. In November, you have the US election. You have elections happening in UK, in France. So there is this change. There is this, so many ways in terms of policies, in terms of thinking that is happening across the world. And this volatility will continue to remain. We were all very hopeful that, the war that is happening in the many places of the world will, kind of slow down, and, we will move more towards peace. But seeing the current situation, it is not looking like that. And rather there is there's a risk of escalation and increase. So as a result, I do not see the volatility going down till we end up with by the end of the year. So we have weddings coming in the Q2. There are a few weddings, but most of the weddings are in Q3. And already, if we look at our purchases that are happening right now, consumers are worried, and they are starting to start their purchases for the weddings that are there in Q3 and Q4. So that is how we are seeing at the market.
Right. My next question to you, Mr. Sen, is that, the B2C market overall in India is quite nascent when it comes to, focus on exclusivity of natural diamonds. I mean, the big players are not at all focusing on the lab-grown diamonds, but you have 3 stores now when it comes to the lab-grown diamonds. So I want to understand what is the progress there, and what kind of markets are you tapping, because lab-grown diamonds is a big market to tap into.
Correct. So we have started off with 3 stores in the lab-grown diamond under the brand name of Cines. And we need to understand that, the other branded players, I'm quite confident that over a period of time, this category shall be considered by them, not because of any other reason. While precious diamonds are very critical, it is like an asset, it is like a gold, it is natural, it is, with a lot of effort and investments are going on to extract those diamonds from the Mother Earth. But at the same time, there will be this, 5 years down the line, 7 years down the line, we need to look into the future, and we need to see that There could be one which is in terms of affordability. It could be one which is in terms of adding stones to your jewelry to make it look more beautiful. It could be one that you cannot with a much lower budget you can fulfill your desire to own a bigger size diamond. It could be
Right.
one that the large middle class aspirational young generation middle class consumers that one might want to own any form of diamond. And lastly, 5 years, 7 years down the line, this is a substitute in terms of how you can take care of your ESG needs when the environment is damaged lesser comparatively. So therefore, I think that it is important that you start somewhere. It is not that
Right.
you're a part of the jewelry industry. You are selling diamond, gold, platinum, silver, fashion jewelry. So why not also have a sub brand and start off for fulfilling the need of the customer? So I think this is how we're looking at it, and we are trying to build on that brand.
Right. You talked about the organized and the unorganized sector. We're seeing that the jewelry industry as a whole is seeing a shift from the unorganized to the organized sector. As we speak, the organized sector accounts for almost 40% of the total jewelry segment. But going forward, from a longer term perspective, where do you see these trends going from this 40%? Where will the organized sector go, and how will this benefit your company?
So see, if you look at the trend that has happened over the last, say, 10 to 15 years, at that point of time, organized was about 20-25% and unorganized was about 70-75%. So from 20-25%, currently organized is about 40 and the unorganized is 60. Now, with the onset of GST, with the onset of the various initiatives taken by the government, the digitalization, it is helping even the unorganized players to become organized. So it is not only that the larger players, the organized players who are capturing the market share, but it is also the unorganized smaller players across the country, even in the smaller towns and cities of the country. They are also getting more formalized. They are also adopting systems, processes. So this 40%, I think, over in the coming 5 years should move towards 60%, and unorganized will be 30-40%. It is changing in a very fast manner, and this 20% is not only going to be the larger organized players who will be growing, but it will also be the smaller unorganized coming and becoming more organized.
Right. My next question is from the business side of things. You have guided for a number of stores of expansion around 20 to 22. And I want to understand how much of these will be owned by you and how much of these will be franchisees.
So we would, as a strategy, want to ideally have a 50-50 kind of a ratio, where, we have about plans of 18 to 20 stores, out of which about 8 to 10 will be company-owned, company-operated, and 8 to 10 will be franchisees. But, franchisees are something that, is not really where you have to invest your capital. We're looking for, franchisee partners who can invest the capital, and that can always increase. But I think that out of the 18-20 that we intend to open this financial year, we want to do it in a 50-50 ratio.
Right. In your con call, you have guided for margin improvement back to 8%. Now, I want to understand that what will be the levers for the same, and do you think that there is an upside more than 8% margins going forward in FY25 or maybe FY26?
So see, the EBITDA margins that we're talking about, where we're saying that currently we are about 7.123, and the endeavor will be to take it towards 8. The simple lever of increasing it to the 8% margin is the stud ratio that you try to increase, which is through lab-grown diamonds, through natural diamonds, through gemstones. And currently our stud ratio is only at about 11%. So with the increase in gold price, consumers are also, for their daily wear and everyday wear use, is looking to buy small diamond jewelry, which is in 14 karat or 18 karat. So there is a high possibility of increase in stud ratio from 11%, which we want to gradually take it towards 15%. That will be a major lever. Plus the store that we are opening, we have opened in the last 2 years, and also the ones which we are going to open over a period of time. Once they move towards the maturity level and achieve their full potential, that way the cost will not increase to the extent that the stores will grow. And that will be another lever for which we hope to move towards the 8% EBITDA levels that we are.
Right. So as you rightly mentioned that, you are focusing on your studded jewelry segment. I just want to understand what is the kind of revenue breakup at present when it comes to studded jewelry, diamonds, gold, silver, platinum, and going forward, how do you see the change in that mix?
So diamond jewelry is 11%, your gold is about 85%, and your platinum is about 2.5%, and silver is about 1.5%. So this is the broad breakup of the categories we are selling.
Okay, Mr. Sen, lastly, one quick question on the international expansion. You are tapping into the global markets and, over the 5 to 6 years, international market expansion is what you're aiming at. So I want to understand that how will this aid your top line and bottom line going forward?
So if you look at it, many of our jewelry players from our industry have already started the journey of taking Indian brands and Indian products in the jewelry category to all over the world. Either catering to the Indian diaspora or the other population. So India is a hub for jewelry manufacturing. India, if you look at their exports, jewelry plays a very important role. Most of the diamonds are cut and polished in India. Even a large chunk, they are the top 2 or top 3 jewelry exporters in the world. So it is time for Make in India products to go global. And while we sitting from our manufacturing hub of Calcutta, which is famous for its gold handcrafted jewelry and also diamond jewelry manufacturing, we want to cater to markets in the Middle East, the Indian, the subcontinental diaspora, where culturally there's a lot more alignment. And diamond jewelry is more global, but there are already so many players catering to the diamond jewelry segment. You can see the jewelry fashion designers of India, they are also making names all across the world. So I think that it is time that with the growth of the country and the respect that the country is getting across the global world, it is many, many such brands from India that should take certain steps to make their presence felt across the world and cater to the market with their products of good quality. So that is how we want to move forward.
Okay, well, Mr. Sen, lovely chatting with you. Thank you for giving us those wonderful insights on the jewelry sector as a whole.